So why is Marathon Digital going down? Well, technically, price did hit last month. This support resistance band at $20 actually came right to $20, which is the round hole psychological number before dropping. Question is, why does it continue to drop? Well, the backdrop is you have the 10-year bond yield continuing to go up. The Fed meeting minutes were released this past week. There is anticipation that we can see at least another hike. We do see interest rates picking back up. As a result, we see the dollar moving higher. Bitcoin trades in dollars. If Bitcoin is going down, that means all associated derivatives are going down as well. Now, before we continue with the analysis, let's look at this article because they just released their earnings this past week. It is coming from CoinSpeaker. Marathon Digital misses Q2 2023 earnings and revenue estimates. Mara drops 2%. So anybody who wants to get into crypto or add to their bag should be licking their chops right now. So one of the leading Bitcoin miners in total hash rate, Marathon released its Q2 2023 earnings 2 weeks ago, August 8th. Nevertheless, the company has performed very well this year. It is up, or was up, 350%. For Q2 2023, which ended June 30th, the company recorded a net loss of 21 million or 13 cents per share compared to a net loss of 212 million or $1.94 per share in the same period a year ago. So their net loss was a lot less, roughly 10x less, and that's due to the price surge we saw in Bitcoin this year. Bitcoin hit a low, I believe, of roughly 18K. It's sitting at, it was or did go up to 32. It's now back at 26 or so because of the backdrop. The company highlighted that revenues from Bitcoin mining during the second quarter came in at 82 million, a significant bump from 25 million reported during the same time last year. During the second quarter, the company announced that its Bitcoin production increased by, wow, that helps 300%, which significantly helped offset the 14% lower BTC price compared to the same time last year. So at the same time last year, prices might have been in the 40-ish K area. Notably, the company sold about 63% of their roughly 3,000 Bitcoins produced during the second quarter, amounting to 23 million. Now, why do people buy miners? Why do people buy Coinbase? Well, the mainstream adoption of Bitcoin among other digital assets has helped BTC value gain more than 77% year to date. However, due to the lack of a safe Bitcoin investment vehicle like ETFs in the United States, institutional investors are pushed to expose themselves to crypto assets through companies like Marathon Digital. So you got a lot of the big players, a lot of the smart money on Wall Street. Their hands are tied. So in order to play the Bitcoin indirectly, they're buying associated derivatives of Bitcoin through public traded companies such as Marathon. All right, in a bid to ensure future growth prospects, Marathon Digital grew its energized hash rate by approximately 50%, from 11.5 to 17.7 exahashes. Consequently, the company accounted for a total of 3.3% of all total Bitcoins mined during the second quarter. All right. So personally, I'm licking my chops. If this is the weekly chart, and we can see that there are weekly buyers at this $8 level. Now, let's blow this up a little bit. we had a rally in price. This is the weekly chart back in March. A couple of basing candles and then a rally out. Now price did return, but it only penetrated the zone roughly a quarter before then doubling and hitting a most recent high of $20. So you have unfilled buy orders sitting below 850 to about the $7 area. Price is roughly $3 away. Now, I'm going to put an alert here because what I'm looking to do personally is buy call leap options going out to 2025, and that's an opportunity to use leverage. Now, leverage, it can be fire, you got to be respected, but I'm going out that far to buy myself some time. Let's see what I will be looking at. So during the last bull market, price hit, just say $80. During the prior bull market, price hit roughly $40. So the question is, can price hit, again, this is a double, or just keep it in absolute values, $40. Can price hit 120? Right? Can it go from 40 to 80, and during the next bull cycle, another $40 to 120? It's very possible. Some are talking if the spot ETF is approved, we could see Bitcoin at least at 100,000. On the high end, maybe 175K. So can it hit 100? Very, very possible. Again, at the high of the last bull market, it was at $84. All right, so let's take this off. This becomes the target for the next bull market. So what I'm going to do is put in prices can get a little bit lower. I can sell some puts right now, and potentially get in at a little discount. But nevertheless, I can sell puts to fund the calls that I'm gonna buy. In those calls, I'm gonna be real conservative. Depending on the price, it's going to be cheap. This is going to be my strike price going out roughly 14 months. Now, I was playing Marathon in the last bull market. I got in, I think, at $9. Wrote it up, wrote it down, shorted, bought more until I eventually got out. So had a decent bag. This time around, I'm going to buy. When it gets to $50, just buy short dated calls. There's a lot of different things I can do once I'm in the money. But I do anticipate there being a little bit more downside risk, right? And we need to see the US dollar kind of turn around and start going down. That would be bullish for Bitcoin. Again, Bitcoin is traded in dollars. So we see an uptrend in the dollars. We see a downtrend in Bitcoin. We need to see the dollar turn around and start going down in order for Bitcoin to turn around and start going up. But I'm going to start building a position if price can continue to move down. Again, I'm looking at my chops personally. I love this weekly bias level. Maybe I'll start dollar cost averaging in if price can move down to the $10 level. We'll see. But there we go for Marathon, one of the biggest Bitcoin miners out there. Thanks for watching. Subscribe. Please like the video.